continuous learning and research. Stay informed, invest time in learning about investing concepts, market trends, and economic indicators. Read financial publications, follow reputable sources, and consider joining investment communities to expand your knowledge. Understanding these investing fundamentals will help you make informed decisions and navigate the stock market more effectively. Remember that investing involves risks, and it's essential to assess your personal circumstances and consult with financial professionals before making investment decisions. 8. How to build the foundation for investing in the stock market. Sabri vlog. Building a strong foundation in the stock market involves a systematic approach to learning and developing essential skills. Here are steps to help you build a solid foundation. 1. Educate yourself. Read books and resources. Start by reading books on investing, stock market fundamentals, and financial literacy. There are many acclaimed books written by renowned investors that provide valuable insights. Take online courses. Explore online courses or educational platforms that offer courses specifically focused on investing, stock market analysis, and financial planning. Follow reputable financial websites. Stay updated with reputable financial websites that offer educational content, market analysis, and insights from experts. Examples include Investopia, The Motley Fool, and CNBC. 2. Understand basic financial concepts. Learn financial statements. Understand the basics of financial statements, including balance sheets, income statements, and cash flow statements. These statements provide insights into a company's financial health. Grasp key financial ratios. Familiarize yourself with common financial ratios, such as price to earnings, P/E ratio, earnings per share, EPS, return on equity, ROE, and debt to equity ratio. These ratios help evaluate a company's performance and valuation. Explore economic indicators. Study key economic indicators such as GDP growth, inflation rates, interest rates, and unemployment rates. Understand how these indicators impact the stock market and individual stocks. 3. Start with paper trading or virtual portfolios. Practice with virtual portfolios. Many online platforms offer virtual portfolios or paper trading simulators that allow you to practice investing without using real money. Use these tools to gain experience, test strategies, and understand the mechanics of trading. 4. Develop a long-term mindset. Set clear investment goals. Determine your financial goals, such as retirement planning, saving for education, or buying a home. Align your investment strategy with these goals and develop a long-term mindset. Understand the power of compounding. Learn how compounding works and the impact it can have on your investments over time. The earlier you start investing, the more time your investments have to grow. 5. Learn different investment strategies. Explore different investment approaches. Study various investment strategies, including value investing, growth investing, dividend investing, and index investing. Understand the principles behind each strategy and how they align with your goals and risk tolerance. 6. Stay updated with market news and develop research skills. Follow market news. Stay informed about market trends, company news, and economic developments. Read financial news, follow reputable sources, and consider subscribing to newsletters from investment professionals. Enhance research skills. Develop skills in fundamental analysis and technical analysis. Learn how to evaluate company financials, analyze industry trends, and use technical indicators to make informed investment decisions. 7. Consider seeking professional advice. Consult with financial advisors. If needed, consider seeking advice from certified financial advisors who can provide personalized guidance based on your financial situation, goals, and risk tolerance. 8. Practice patience and discipline. Be patient and disciplined. Investing in the stock market requires patience, discipline, and the ability to stick to your investment plan. Avoid making impulsive decisions based on short-term market fluctuations. Building a strong foundation takes time and continuous learning. Remember that the stock market involves risks, and it's important to assess your personal circumstances, conduct thorough research, and make informed decisions. Regularly review and adjust your investment strategy as needed to stay aligned with your goals.
Thank you for your joining us. Please subscribe, like, and follow our social media channel. If you feel this information will be useful to you or someone else, please share this video. Comments with your thoughts and questions.